Guys, it's good to see you. It's good to see you. Welcome to this week's market analysis, and I'm excited to welcome you to Traders Lounge. I pretty much would like to recommend and request you, if you haven't subscribed, please subscribe to our YouTube channel for you to be able to get the latest in terms of market analysis. We have a section for market analysis where we dive into different asset classes. The first category is on Forex, cryptocurrency, and commodities. And the second section now, which is specifically in regards to what we're going to talk about, is on volatility indices. So if you haven't subscribed, please log in, subscribe click on the subscription button, recommend to your friends, your family, anybody who you think can be able to benefit. That is the only thing that you can do to help us to also grow the channel, and in the process, let's build a strong community of traders who actually believe that it's possible and it's doable to actually trade on a full-time basis and earn a living from trading. That said and done, for this week and for specifically today, I want to quickly do a recap because there are a couple of things I've seen in the market that I'd really like to bring into your attention, especially on the volatility indices side. And I'll not go into the specific trades. I'll just give an overall direction, an overall bias of the market, and we can be able to dig deeper and do a recap, especially on Sunday or Monday, very early in the morning, into the new week in terms of the new trades. Now, going forward, every week I'll be updating on the trades that we have taken for the week. It's not just going to be an analysis alone. I'll also be updating on the trades we've taken for the week. And that said and done, let's jump into the analysis. I'll start with the jump 75, and for jump 75, guys, as you can see, we have a red box down here. That red box represents a retracement section, which is between the 1950 to actually 197.54 and below. For this particular setup, let's wait and see. I'll not advise for you to jump in because the market has already gone and there are more opportunities. But if you want to risk, put your stop loss below the red box and target the equilibrium point of this retracement. You can see this Fibonacci retracement. The equilibrium point represents 50% of the retracement. It's just that I've customized my Fibonacci to show equilibrium instead of 50%. So this is a bullish setup that will get you to the equilibrium point. So that is the jump 75. I'll quickly move to the next, which is the V25-1S. For the V25-1S, guys, for this one you really have to be careful. We will have a retracement. And that retracement, this is on the 1 hour chart, and as you can see, we are having that will then give us the bias and the momentum in the short term. Let me show you this. In the short term, this is what we're looking at. We have to get there, but I still have a bias of this thing going further down. Why? If you can see in the 4 hour chart, and let me go to the daily chart, we still are on an ascending channel that I feel there's still more room to the downside to come and at least retest this area. So we'll keep on updating this trade. I'm just giving a general observation for now. Be very, very careful. If you're looking at it on the short term, there has to be a retracement first, and then as we're beginning the new day, because the new day begins at 3 a.m. this is 2:29. Let's see how the new day begins, but it will give us an opportunity for a buy. We will buy up to the 61.8 retracement area, after which we have to be really careful because it could give us an opportunity for a further sell down to retest this ascending channel, which is at any point below 397.827. Still not a very good trade for me. I'll stay out of the market for such kind of a setup. The same way I've recommended you stay out of the market for the V75. I'm just updating you. If you wanted to take a trade, how is the market? So this is a bullish V25 one, as I said, in the short term, consolidating but still a bullish, of which from the 4-hour, you'd rather wait to enter a sell from here, because that will be a good opportunity, but with extremely minimum stop losses, because this price can go up, it can still go up and up and up and up. That is the mystery of markets. The markets tend to, sometimes they do not 100% support critical areas of confluence, so you do not guarantee, and that's why I'm saying you have to be careful. Any trade that you take, you have to have extremely minimum stop losses that can be able to absorb your risk profile. Let's jump to V301S. This is what I'm looking. We are on an ascending channel. Price came from down here. We made the first move to the up, consolidated with small retraces, and the retracements immediately after that. Price has been moving from this area. Let me just mark it. This is our critical area. This is our critical area, and as you can see, we still haven't. After here, price has been going up. Two things will happen. You have to be really careful with this one. I'll not chase this trade. I will do this. The best setup for me will be either this trade, this one. Let me just show you something. The best trade for me will be if I can be able to see something like this. If I can be able to see something like this, come back to this red box, that will definitely give us a good setup for a further bullish up to the 69 area. If that doesn't happen, if this price keeps on going up, then the first immediate area that we're supposed to look at is 62.39, of which from there we have to really be careful, because there's a high probability, pardon, here this move must at least cover the same distance like this. So that is 61.09, out of which we can either have these, see this to at least retest a 50% retracement of this move and then give us the further up to there. So let's watch closely. For me, I'll really be keen on a retracement on that, because we are already on the smaller time frame. As you can see, we are operating in an interesting area of, see that? We're operating an interesting area of a pullback. So my bias will be, first of all, to see this price come, at least create some form of retracement, and if possible retest this area. Anything below 38, then that will give us a perfect opportunity for a buy. So three scenarios. Scenario number one, this price can move up, retest the 61.09, retrace back just the way I've indicated here, move 61.09, retest to at least a 50% retracement of this, and then further go up. That is scenario one. Scenario two is where the market is right now. Into the new day, we can see a bearish setup come and break the 38.09 area and give us now a positive high probability trade that will now take us to the 69.73. I would prefer the second option, and I will not sell if there's a retracement. I'll wait for the price and get into this market. I'll update this as we get into the new week. This is one of the critical trades for me to look at, especially in the next. I want to see, this is the 8-hour candle. I want to see how the next 2-3 8-hour candles behave. So meaning for now and for the new day that is going to form, I'll stay out of this trade. But from Saturday, it can give us now a right premium discount for a further continuation to the upside. I hope you benefited from the analysis of the volatility 301S. And guys, this is just my general overview of the market. I'm not giving any indication. I've not given any trades like I have already given on the forex side. If you've watched the previous videos of the forex side that I just finished, for perfect entries, as I said, we will start doing that into the new week. And if you really need to now polish further, understand further how this thing works, then you can drop us a comment on the comment section and we can be able to pick the conversation further, because we have a new trading class beginning the new month of September, and we can be able to discuss further and see how you can benefit from Traders Lounge Academy in terms of you improving on your analysis skills. So that is V301S. The next one you're going to is Jump 100. Jump 100, generally my bias for Jump 100 is we still expect a buy. We should still expect a buy for these. Let me do something. We should still expect a buy for this. But before that happens, we expect, for now, my bias will be on a further retracement like it is doing, as you can see. My bias will be on a further retracement that can now give us this trade, at least to the 60, at least to the 79 mark. So that is what I'm looking at for now. Let's hold on. Let's stay out of the market. This is a daily chart, as you can see. Let's wait and see how exhaustive this move can be. I'll keep on updating on this specific trade, especially into the new week. That is when I most likely see that will have a potential setup for a further continuation to the upside. On to the next, step index. Step index is interesting. Step index is very interesting because we have been on a further market pullback. Let me see. For the last several weeks, we've been pulling back. But as you can see, the bias for step index still is on a sell, and we are sitting on a very sensitive area because this is a weekly chart. And if that is the weekly chart, if I was to do something like this, there's something I wanted to show you guys. Let me see if I can be able to pull it. Now, let me see if I can be able to pull it. You see that? You see that? From where we sit right now, this is a very long term. We are still generally in the medium to long term. My bias for step index will still be a sell. However, when you look at it, we are exhausting these moves. So two things are likely to happen. Because you are heading towards the end of the week, price may still be playing and bouncing around this area, which represents what? Which represents, let's just quickly do this, which represents a region between 61.8 and this is actually 70% retracement where the price is right now. So we can play around this box. We are getting into that box, and this box can take even the whole of the next one, today and tomorrow, because you only have 2 days before we get into the end of the week. But as we get into the new week, this is a very good setup for a further continuation to the downside, with the first immediate take profit being, let me do this. Let me do this. Probably it can help someone. So the first take profit from the blue box, from the red box here, the first take profit is the previous lows. You see here, and the previous loss, that is what we do this at least 8351.7. that will be the first take profit. Guys, I'm going to do a separate, immediately after this I'm going to do a separate video for swing setups for the month, for the next for this year, meaning setups that you can actually take and hold on to them for the next several weeks or several months, and you will be too much profitable for the swing traders. So this is the first move. Otherwise, I see it from a long term, it coming and breaking there and coming all the way up to down here, region around, yeah, around 81.52. So that is my analysis. That is the general overview of step index. So in the medium and the long term, still bearish. We are on a critical area, and that's why I'm doing this video. This box, anytime you see me highlighting a box, just know that you're in a critical area for something significant to happen, as you can see on the weekly chart. Are we together there? Great. Then my next will be boom 1000. Boom 1000. Generally, my opinion of boom 1000 is still on a bullish, still a buy. But where we sit on a critical area that you have to be careful that this thing has to retrace back fast before we get that next move that can, just a minute, before you get that, because when you look at it in the monthly, let me show you in the monthly, this thing is still going to go up. We are bullish and very bullish. Look at it on the weekly, still very bullish, but we have to be careful on this area. Otherwise, if it breaks here, it has a potential of just going up and forming a critical move like this one. Let me show you. You see this move? You see this move? That is the move expected from down here. This is what is actually happening, because this was the low, so this is the move. That is the move to retest this area. I'm just doing my top-down analysis. This is very medium long term, and if that is the case, then look at this. Look at this. Sounds interesting? That is the ascending channel. And if that is the case, then we really have to be careful because of this. Let me show you. Two things will happen here. Two things will happen here. Two things will happen. Just a minute. This area is this is a very instrumental area on price action. Just a minute. There's something here. Just a minute, guys. This. So, two things will happen. One, from where we sit, you cannot take us back there. from where we sit, let's go to the daily. This thing, be careful guys, because it could give us this move, then followed by this move to the upside, or just a minute, or it could give us this move. Let me show you. Or it could give us this move to come and retest this area. This area is extremely critical. I'll explain it into the next series in terms of order blocks. So that is extremely critical, out of which then we can have this move to the upside to go and retest there. So there are two scenarios. Scenario one, I've explained. It can give us this and then break out of this channel and get the price back to this. So that is the first scenario. That is the first scenario. We together? So a move retraces down and then takes us back. We must get to the 15,826 in the medium to long term. So guys, remember, one candle represents a whole week, and we still on a consolidating channel, which as far as I'm concerned, there is still a probability that this thing is not yet over, which therefore gives me a bias of a further sell, which gives me a bias, if I was to trade these, which gives me a bias in the medium term of this move. Let me show you of this move. Let me show you something here. This move. You see guys? So this could give us this move. The same way it gave us this move, it could be giving us 1, 2, 3 to here, and then now from here it gives us a prime good setup to take this thing up to retest here. To take this trade up to retest the 15,826 level. So that is the top down analysis for Boom 1000. If you have any question, if you have any comment, kindly drop the comment or the question on the comment section, and I'll be happy to pick it up with you. That is for Boom 1000. I'll jump some of these setups. I'll just go specifically the ones that I'm seeing something building up, a story or something like that. Now, like here, you can see this is an ascending channel clearing. We are consolidating. There's still room to come down before it goes up. Boom 500. Boom 500 is a short-term trade. This is a good trade that can, if you have an account that is above at least $100, this is a good trade that you can. Let me just simplify that for you. This is the signal box. Anything below the signal box, take the stop loss. But the best for this one, you'd rather wait for this to retest. Wait for tomorrow's candle, see whether it will have a pullback, and then get in from here, from 39.40 around there. This is a good trade, at least to 44.63, right? Yeah, then the next one is V10. Let's go to the next one quickly. V10. This is the overall weekly overview of this trade. We are coming down slowly by slowly chopping. I will not advise or recommend you to take this trade unless you have a patient account and a good account. At least an account with at least over $200, and you take a small lot size, because this is going to chop slowly. As you can see, V10 doesn't make significant big moves. It makes small, tiny moves coming down, tiny moves coming down, tiny moves coming down, tiny moves coming down, tiny moves coming down. This is what it's doing. 1, 2, it will still come like this, maybe go like this. So generally it's coming down to this area. How did I derive this area? First of all, I picked this channel, a downward channel, from the upward resistance zones. I created it and had to make sure that it touches at least 3 lines, line 1, line 2, line 3. So with that, I duplicated this down here. So this is where we are looking at ultimately coming to. So this is a swing trade, but I mean, we have more opportunities in the market. For now, I'll stay away from these, because I really don't see we have many opportunities in the market, unless you want to really scalp in the short term. And even on the short, because look at it, even, I mean, it's dragging itself. There's nothing clear. Literally, there's nothing clear. So I'd rather stay away from that. That is for me. Then let's go to V50. V50, this is perfect. This is a good trade. We are looking at 260, 24.33. This is a good trade, guys. So that's still on a bullish. Then boom 300. Boom 300. Now, this is one of the trades that we have to really be careful about, because it could go up. This could be the lowest it's forming. Like you can see, these two candlesticks could be a double bottom. I'll analyze these in details in the next series of this most probable swing trades for volatility indices. But this is a potentially bullish trade. The question is, what is the appropriate area to get in? Because this is what I see. So it could be that. Alternatively, we could still make a further move to the downside because of this. Let me show you. There's that. But then there's also this. So just a minute. So this could be our signal box. Alternatively, this could be our next signal box, meaning that is the first option. Alternatively, that is the first option. Alternatively, this is the second option to retest this area. Just a minute. To retest this area. So how do we trade this? I'll analyze it in the next video of most probable swing setups. Sounds perfect. Can you see that? This signal box is actually directly relational to that. So it's either that or this thing comes all the way down here and gives us the second leg retracement. So anyway, let me handle that on the swing trade analysis. Let me not bother you so much with a lot of details on this one, but just a minute. So something like that. Great. V75. Same with V75. Let's wait because we have two ascending channels. We have this one. You see what happened from here? Price is almost coming to hit that channel. So if it comes there, then we will take this trade into the new week on a bullish. So that is one. The second is price may get there and trade further down on this second ascending channel. You see this? Yeah. So let's see for the next one how this week ends and how the new week forms. If there is no further opportunity for a buy, then we will still expect it to come all the way down here and give us an opportunity from here on a further buy. But generally, we have to still come and retest. We have to come and retest up here. We have to break that. Are we together? I'll do it on the swings for the week for that. V100, as you can see, an ascending channel going smoothly. We have to hit there. That one is straightforward. V100. Let's move to V200 1S. V200 1S. Now this is my favorite swing setup for the year. And when I say year, I basically mean you can hold this thing for the next several months without even looking back at it. Ascending channel, you see what has been happening here? Popping, popping, popping. We are there again. But this time around, from here, we anticipate this thing to, I will do a top-down analysis on this one. I'm just giving you a big picture for it. We expect this to at least, when it starts going up, at least to the 50% retracement, which is 11,113.65. And it is a setup that is really getting prime day by day. This move alone can take even can be as short as 2-3 weeks, or can be as long as a few months down the line. So you never know. This is very prime. Very prime. Correct. So I will not sell this. Any opportunity I get for the V201S, I'll buy. I'll show you, especially into the new week, what we'll do with this trade on two accounts. Account number one is short term, and then account number short term meaning for buying, selling, I mean day trading, and then a second account must be for swing trading. Swing trading. This is a perfect trade for swinging. Crash 300, still on the bullish. This thing may come down. We may get this, I mean, price may still come down and retest this area. Let's just see what happens. But generally, we are on a bullish up to the 2200 area. Range break 100 is my second best setup for swinging. After 101S, range break 100 is a perfect swing. You can see this is the monthly chart. We are getting to the 70% retracement, which is extremely critical. From here, we start monitoring and seeing how this thing behaves between here and 79%, because we expect this move to the downside to at least come and retest the ascending channel. Right? I'll discuss about it on the swing trades to take for the volatility indices in my next video. Then finally we have jump 10 and jump 50. For jump 10, guys, be very careful. We still have this move to be exhausted. A very good swing again. So let's carefully watch this as it comes down until we get to this area. This is the signal box. The signal box. The signal box is on the 95,000 area, 95,000 thereabout area. So we'll keep on tracking this, but this is a perfect swing setup, but you have to really be patient with it, right? So we have the jump 50, we have the range break 100, we have the V200, we have the, I did not do an analysis on the V51S. It's also a perfect swing. Let me show you on the monthly. You see where we're seated. This is extremely critical. This is extremely critical. And as you can see from the weekly, definitely the new candle for the new month has to take this thing up. But then again, we have to be very careful. This is a good trade into the new month so that we can give it enough time to see what it will do. But definitely the candle for the new month will be a bullish candle. Can you see that? So for now, let's stay away from it. Let's see how it forms, because there are different things that can play into this. Actually, for this one, I would be a bit more skeptical and look at it from that perspective. Sorry guys, I hadn't seen these. Sometimes when you do the live analysis is when you get really, because that is what I see. Let me see what level of retracement that could be. Perfect. 70% retracement. That is a premium discount for this move. So guys, for this one, let's stay out of it. Let's wait for price to at least come to the signal box. But this is one perfect swing with a $10,000 account. So with a $100 account, and you take this trade down here, this trade will actually give you how much? Let's see. If you were to take a swing on this one and put a pending buy down here, how much would that translate to? Okay, let's see. Let's quickly see. So that is, just a minute. So assuming that is $300 up to, from where the price is up to there, that's 300, and this is 1,150. So basically what it means is with a 0.005, that is 1150 plus 300, that is 50, almost $1,500. That is the power of prime entry and swinging, especially in the volatility, because this thing, the moment it moves from here, trust me, we're going up. It can even take a month, 2 months, 3 months, even if it's 5 months. But at the end of the day, your swing trade will be perfectly safe. But for such, I recommend at least you have an account of a minimum of $1,000, because this move could be small. As the smallest volume for these could win a lot. Because with $1,000 and then you take a move of maybe 0.005, which is the lowest, and you're making another $1,000, you literally double that account in in a span of maybe 6 months. Yeah, which is not bad, because that is your swing trading account. Guys, it's very critical that we have one account which is for daily trading, and another account which is meant purely for swing. It's like your pension fund. It's like your retirement fund. Yeah. And when you see it growing, even if you were to do a 30 to 40% per annum on it, it is much better, because this is a long-term account. This is not something that you want to remove money from there and put into projects or pay bills or something. This is long-term. This is like your pension fund. And anything above 20% per annum is extremely lucrative. But guess what? Realistically, you can literally double that account every year. Now imagine if you had $10,000 and you're doubling it every year in 10 years' time. How much is that? Based on the power of compounding, your account will be definitely over $1 million. You see? So trading is a marathon. It's not a sprint. And with that in mind, kindly guys, do that. Anyway, I'll talk more about such conversations when I'm looking at swing trades for volatility indices. Is there anything that I've left out? Let me look at my notebook and the analysis that I've already done. Jump 50. So finally, jump 50. Let's go to the jump 50. Jump 50. This is a short-term trade, as you can see. Perfect. We are. This leg is done. That leg is done. So this is wait for price to pull back to the blue box. For this one is the blue box. For this one, as you can see from there, this can come down and then take this thing up to here. Yeah, and then from there, so I'll take this trade later, because I have to monitor and get this price at least to the 175.01. Anything above 175.100 is a good entry point for a further sell down to retest 154 area. Right? Awesome, guys. So that brings us to the end of volatility indices recap for the week of 14th to 19th of August 2022. If you haven't subscribed to our channel, please subscribe to the channel. If you have any questions, comments, observations, drop the comment in the comment section. We are beginning a $50 to a $10,000 challenge. It will be very active trading. I'll share more details separately on it. But guys, we need to start this thing ASAP. I have guys who are asking me, when do we start? We want to start this thing as if by the 1st of September. 12 months down the line, we grow $50 to $10,000, and we can only do it for that specific one. We can only do it through the volatility indices. Forex trading, we will come up with a challenge. It has to be a bit higher, probably to $50 to $10,000. We will do it much later on in the course of the year. But for volatility indices, $50 to $10,000. If you're ready for the challenge, drop your comment, send us a DM in our social media handles, the Facebook page, Instagram, even TikTok. I mean, we are all over. Drop us that. Let's build a conversation. Let's see what happens. Otherwise, good luck trading. We will do another recap probably on Monday morning for the new week. Otherwise, you will see the next video I'm going to do for volatility indices will be swing setups for volatility indices, and I'll dive deeper. And then after that, I'll do one specific video entitled "Trading is a marathon, it's not a sprint," and I hope you'll be able to get more nuggets from it. Good luck trading. If you want to learn more about trading, if you want to become a better trader, drop us a comment, send us a DM. We'll be able to build up with you through our Trading Launch Academy. Thank you guys. Thank you for the support. Subscribe, share. Thank you. Cheers.